Action is the foundational key to all success. Pablo Picasso. My friends, we see stocks and bonds down, gold and Bitcoin up. Let's jump into these charts. We always start with what? The weekly chart, and look at it continue to move down. As we start the week off, we have a big red down candle. Looks like it may be tying for the biggest yet if we go 2 weeks back. But again, we see things spiking down. Price percent oscillator, derivative oscillator moving down. Of course, this has been beautiful since we had that 2-day recross going down. And things have just trundled down except for about a 4-day period where they really bottomed out and then popped up a little bit and then back off the deep end. Those of you who shorted the market with SH, that is the inverse of the S&P 500 single inverse, a good one to practice trade. Also, if you happen to be Patreon members and you've taken our 3-part course, it's available for free to them. Then, of course, perhaps you are options trading. Options made simple the charting wealth way. Perhaps, and again, when I say options trading, I'm talking about practice trading. We're not a stock calling service. We're an education firm, but that practice trade has done quite well for you. Now, the background that you see here, this trading platform is TC2000, and it has paper trading, paper practice that is available. There's a $25 off coupon. Check that out if you're interested in getting serious. This is the paid version of freestockcharts.com. Now, what's up with the half day? Again, half day down in the morning, down in the afternoon, price percent oscillator heading down, derivative oscillator still losing some downward momentum. So we'll keep our eye on things. Starting the week off quite nice for our short position. And look at the Qs. If it could be better, it is 2.08 down. The S&P was down 1.29, our biggest downer for the day, and that is wonderful because we had a weekly vertical crossover back on the week ending the 17th of September. And look at this big candle starting the week off, price percent oscillator, derivative oscillator, just hockey sticking it down, quite gorgeous. 2-day, continue to zoom down to first day of this latest 2-day candle. Again, looks beautiful. Those of you who shorted the market with that weekly vertical crossover, your practice trade is going swimmingly well. Half day, we can see it was down in the morning, not quite as much in the afternoon, but price percent oscillator heading down. Derivative oscillator still losing a little bit of downward momentum. So things are looking quite beautiful. Now, what could happen on Tuesday? It could take back a little bit of that down movement. Typically, things sort of go in a herky-jerky fashion. How can you see that? Well, you can see it on the half-day chart. Things go down, slow down, move down some more, up a little, then down. That kind of stuff happens. That's why we pay closest attention to what? The 2-day and especially the weekly. The weekly, if you look over and over again in the charts that work, you will see when trends start, they tend to continue. And of course, we've now entered into the fall-winter trading zone where trends tend to be a little more stable. It's not the summertime trading zone where a lot of the big money's gone. It's all coming back in. So again, tends to make for better, more stable trends, usually, although we live in strange times. Let's look at 20-year bonds. Down 0.25% for the day, starting the week off with a red down candle, not hitting the low of last week, but we did have that weekly vertical crossover, didn't we? Okay, so derivative oscillator, price percent oscillator, pulling away from the red signal line, derivative oscillator gaining downward momentum. Look at the 2-day slowdown in the down movement since Friday. We talked about that solid green candle on Friday, giving us a little bit of concern. Again, another solid green candle. It's not an up candle. It's not a green open box candle. So what it is to slow down in the down movement. That price percent oscillator, nonetheless, derivative oscillator still heading down, sitting right there on that 2-day trend line, first day of the latest 2-day candle. So we'll keep an eye on things, see what happens on Tuesday. What about the half day? That's where you can see where, again, We're watching with our Heiken Ashi candlestick, shows us average pace sitting right there on the 2-day. Did cross over at the end of the day, even though it was a down day. That's what we're seeing with our price percent oscillator. It is oscillating up, as is the derivative oscillator. So keep your eye on the prize. If you jumped into that down move, pay most attention to the weekly and to the 2-day as to what's happening. We want to see this turn into a red candle and continue that down movement, not start edging up, pushing through the 2-day trend line. That's where we are on bonds. Lastly, we go to gold. Nice to see gold up a little bit, 0.47%, starting the week off with a green spinning top. Indecision maybe tending up a little bit. Price percent oscillator still heading down and negative, but flattening out. Derivative oscillator flat. What's up with the 2-day? 2-day, again, price percent oscillators negative, but headed up. Derivative oscillators negative, losing downward momentum. Green open box candle forming. We had a little green open box before for the Thursday, Friday. This Monday is up, pushing right there at the weekly trend line. I'd love to see this take off and then pull the weekly back over and start heading up again. But we're just going to have to hold our breath, wait and see. You can see that we've had 1, 2, 3 days of nice up movement after gold most recently bottomed last Wednesday afternoon. So that's good to see. We can readjust our trend line a little bit. Remember, we always want to try to connect 3 candles or more on a trend line. It just makes the trend line more valuable to us. You can always connect 2 candles no matter how crazy it is. So 3 or more is always nice. That's where we are on gold. What about Bitcoin? Bitcoin up 1.40% for the day. We were getting worried last week. Bitcoin was going to cross over, going down. It was trying to do that, pulled back up through that. Price percent oscillator still losing momentum. Price percent oscillator's flat. Derivative oscillator still losing momentum. Green up candle starting to form for the week 2-day. It's negative, but headed up on the price percent oscillator. Derivative oscillator losing downward momentum. Nice big green up candle for the first day of this latest 2-day candle. Let's hope for a 2-day recross going up. When that happens, hey, be ready to pull the trigger for a jumping in point for a practice trade on Bitcoin, if indeed it does that. Lastly, we'll look at sort of the intraday action. What do we see? We saw where Bitcoin most recently bottomed there on Tuesday of last week, the 28th, and then started gaining some of this momentum and heading up. That's where we are, folks, as we end the day on Monday. Looks like it will be an exciting week. Thanks so much for being with us. Don't forget, Patreon members, live question and answer call-in session this Wednesday, 12:30 Eastern Time here in the States. Check your emails. Please go ahead and make sure to send us your questions as well as the stocks and ETFs you'd like us to help you backtrack for practice trading. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.